Hello everyone, welcome back. Here is Ali Talabi, and this is the fourth module. First lesson from fourth module will have a financial statement analysis in this module. So in this lesson, I will talk about trend and common size analysis, and the next lesson I will talk about the financial ratios and financial ratios analysis. So we learned that there are four major financial statements, which is good. But this is the kind of first level. You can look at the financial statements so you get some level of understanding about the performance of the company. But just looking at the financial statement is not enough to measure or conclude regarding the performance of the company. So you need to go with the further analysis to see how the company is actually performing. So there are several ways you can measure this performance. Three common ways are using trend analysis, common size analysis, and financial ratios analysis. As I mentioned today, I'm going to talk about trend and common size analysis, and then we'll move to financial ratios in the second lesson. So, trend analysis. The argument here is the financial data, they change over time. So if you measure the changes of this financial data over time, it might provide you some insightful information. For example, I'm providing some information regarding the sales and net profit of a company over time from 2010 to 2015, over 6 years. So you see that for both sales and net profit, actually the trend is upward. So you see that both are going up. So it tells you that the company is increasing its sales over time. It's providing higher sales and higher net profit over time. So it's going up. So in trend analysis, actually what you're doing, as you see, we have two major variables or two major indicators. Usually on horizontal axis, we provide the year or time. So here is your timeline. So the horizontal is your time, and the vertical, you can provide any of financial data from financial statements. So you can use sales, you can use net profit, gross profit. Here, for example, I'm providing sales and net profit for this specific company. And for sure, you can look at some other data and variables to see how they are changing over time. So for some variables, you're concerned that they are going to change by how much, or the trend is upward or downward. So for example, for sales or net profit, you prefer to have the higher level or upward trend. For some other factors, such as cost, you might consider the downward trend. So that's pretty much what trend analysis is. Again, you're looking at one specific variable over time. Sometimes this trend analysis also is called horizontal analysis. And the reason is we are actually looking as one variable over time. Also, if you look at time series, that's the same argument. Time series actually is providing you similar type of data. So this is trend analysis. So common size analysis, also it's called vertical analysis. We are using one major account in income statement and balance sheet. In income statement, we take sales revenue as our major account, and we state or express other items based on sales revenue. In balance sheet, we are using total assets as our major account, and we express other accounts or items based on that. Let's go with a very simple example. Let's say we're talking about the income statement. So you have your sales revenue. So your sales, let's say, is $100. Your cost, and I'm talking about cost of sales or cost of goods sold, here is, let's say, $70. So this gives you your gross margin or gross profit, which is $30. So let me just stop here just a snapshot of income statement, part of the income statement. So what you do, as I mentioned, you take sales as your major account, and it's your, so this is based on percentage. This is 100% of your account. So your sales is 100%. So you express other items based on that. So your cost is $70 out of 100, which is 70%. So that's 70% of your sales. Your gross profit is $30 out of 100, which is 30%. Just be careful. I'm using $100, so you might get confused. This is the percentage. This is the dollar amount. So you can express other accounts based on sales. And for sure, when it comes to gross profit, you want to have a higher gross profit. So if you're comparing two different companies, if you are comparing even a company over time, you want to have a higher gross profit. So that's the whole idea here. For the balance sheet, you are using total assets. So liabilities, current assets, common shares, you express all those items based on the total assets, which is 100%. So this is the second type of analysis. The point here is you can combine all these analysis and approaches we are talking about. So you can combine the trend analysis with common size analysis. For example, you look at the gross profit for a company, which is 30% in this case. So what you do, you say, Ali, I want to see over time, for example, from so this is 2010, 2011, 2012, 2013, and so on and so forth. I want to see over time how much my profit as a percentage of sales is changing. So you look at the number, you say, okay, for 2010, for example, it was 25%. I noticed for 2011, it was 28%. For 2012 is 30%. So for 2013 is 35%. So this is a percentage of gross profit as a percentage of sales. So you're combining actually the trend analysis with the common size analysis. So you are creating a more complicated way to analyze the performance of the company, which provides you a better picture of how the company is performing. So this is trend plus the common size analysis based on the income statement. So you can do that for sure. When we are talking about the financial ratios, you will have more ratios, more tools, so you can add the financial ratios to common size and trend analysis, and you can create more complicated ways of analyzing financial statements. Thank you very much. That's it for today. Here is Ali Talabi. Next lesson, we'll talk about financial ratios. Have fun. Talk to you soon.